morning, everyone, and welcome to Prince George's Community Federal Credit Union 2023 Financial Webinar Series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, we have joined with Coffee to expand our mission of providing quality financial education to our community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. We are one of the county's best-kept secrets with competitive loan and savings rates, as well as discounts to our national retailers. We currently serve over 17,000 members in the area and welcome you to come and experience the benefits of membership as well. Later on in this presentation, we will display our contact information and answer any specific questions you may have concerning your financial needs. It's not too late to invite your friends and colleagues to today's webinar. You should have received an email about 30 minutes ago, and that email is a link that you can pass along for them to register and join the call. Please note that today's webinar is live and all phone lines have been muted. If you have any questions, please feel free to type it in the question box on the right hand of your menu bar. All questions are private and will be addressed at the end of today's discussion. We will be offering a free 60-minute financial coaching session with the completion of 3 webinars. For more information, we'll give more information on that at the end of today's presentation as well. Lastly, a recording of today's session is available or will be available later on today on our website at www.princegeorgescfcu.org/webinar. And with that, I will turn it over to Ms. Doris Baker.
Thank you so much, Gerald, and good morning and welcome, everyone. Thank you for taking the time out of your busy post-holiday morning to get some information that we're here to offer via Coffee. Let's start off with some statistics as we normally do after our welcome. I just want to let you all know that even prior to COVID, that Americans were drowning in credit card debt. That keeps us very busy here at Coffee because sadly, we're seeing the numbers increase even the more. We're at nearly $1 trillion in credit card debt nationwide. And today we just want to share some information that if you find yourself overwhelmed with credit card debt, that there's something that can be done to help alleviate the problem. Next slide, please. Now, the number you see here on your screen, as you can see, it was taken back from 2019. So this number does vary, but according to that Experian report, consumers, this was the average amount of credit card debt that we as Americans faced when this was taken, okay? Listen, this number never goes away, but it goes up and down depending on personal circumstances and depending on really the financial condition of the country as well. But on average, this is the amount of credit card debt from the Experian report of 2019. I venture to let you know that that number has risen. It's about 8.7% higher than it was during that time. Next slide. Now, when you carry a balance, you pay for the privilege, okay? Different cards charge, as we know, different interest rates. You see there on your screen the average interest rate from the time of the report. And it is safe to assume that that interest rate, because of the recent rise in interest rates, has gone up a little higher. But let me tell you this. For every $5 that you pay towards your credit card balance, at least $1 of that, based on the current interest rates, okay, at least $1 out of every 5 goes towards paying interest. So you paying your creditor $1 out of every 5 that you pay towards your credit card bill. And who wants to do that? I know certainly not I. None of us really want to be caught in that situation. Let's move to the next slide, please. So that leads us right into our first big topic today, and that is how to choose the right credit card for your lifestyle. Now, it might sound like a weird concept since all credit cards basically do the same thing. We will all agree. And they all look alike when you hold them up in your hand. But these small pieces of plastic with rounded corners are all very different when you look at the simple details. Next slide. Now, there's no way we'll be able to take a really deep dive into this topic with the time we have and name the best card for you. Our goal is simply to show you just how many categories of credit cards are out there or that exists. From there, you can easily find more information with a little research. But we also want to warn you about some of these categories. And we'll start with retail store credit cards. They are almost uniformly across the board in all sectors terrible. We're talking about cards that are branded not as general credit cards, but as coming from just one particular store. Moving to the next slide. Now, whether it's Williams, Sonoma, Lane Bryant, Goodyear, store cards are considered among the very worst, and that's according to creditcards.com. Which rates these various credit cards. Now, why do they stink? Hate to use that terminology, but why do we consider them to be the stinky bunch of the credit cards? Well, they change a lot more than the average interest rates. So if you can't pay off the balance each month, you'll be paying a lot more. And of course, the rewards they offer are only good at that particular retailer. Finally, store cards have some of the longest and densest fine print, meaning they are overloaded with fine print, which makes it hard to figure out if you're getting a good deal. And it's easy to get caught up in paying extra fees. And again, we don't ever want to pay extra fees. Moving to the next slide. Now, retail cards have only a few advantages, and it's all about the math. So let's look at this. Do you shop at that particular retailer often for basic items you definitely need? That's a question you need to ask yourself about a store credit card. Then say a card dedicated to a grocery store might be worth it. Is there a great initial sign up bonus? I know that we saw a lot of that during the holiday season, a sign up bonus. That works if you're fixing up your house and the hardware store will give you a deep discount on the $2,000 you're spending on the initial purchase. So you have to use some wisdom and have a plan. Finally, if you can be diligent about always paying the monthly balance, that's going to always be the secret. You might actually profit from one of these cards. Okay, so if it's something that a store that you're going to visit and use often for things you need, okay, if it's often some type of sign-on bonus, and if you can be very dedicated to paying off the monthly balance, then a store credit card may be right for you. Moving on to the next slide. Now, we get to the most enjoyable part of credit cards, okay? The rewards. All of us, everybody loves to talk about rewards, whether it's in points or cash back or airline mileage, whatever it may be. These days, almost every card comes with some kind of reward system. The problem is this: few people look at the other side of the equation. What do I mean by that? Namely, the better the rewards, the more the card will cost you, which means you need to be even more so careful to really profit from owning one of these reward cards. Next slide, please. Besides higher interest rates on rewards cards than other cards, one study showed that nearly 9 in 10 airline cards came with annual fees, something very few other cards have these days. Other studies show that the higher the rewards, the steeper the fees, including the late fees. So if you want to really rack up on these rewards, you got to keep one eye on your payment deadlines. And remember this: if you carry a balance, you're handing your rewards to your credit card company. So you can use them, they can be beneficial, but you have to have a strategy. Let's talk about introductory offers of 6 to 18 months. Now, these cards offer only one big perk, which doesn't sound really sexy, but it really is when you think about it. You get an introductory offer of a really low interest rate, or even sometimes no interest rate at all. I know we've all heard of these. That's right, you might be charged nothing on your balances for up to 18 months, although some cards offer as little as 3 months. What's so great about these cards? Well, if you need to make a big purchase and can pay off the balance within that offer period, it's like someone loaned you absolutely free money for several months. Okay. But like everything else, there is a catch, and we'll address that catch on the next page, please. Now, a balance transfer card is a special type of low interest card. It offers the same introductory rates on as low or no interest, but it has another powerful perk. It lets you gather up your balances on your other higher interest cards and move them over to that one card with a lower rate. Sounds like a really good deal, right? You'll pay a fee now for that privilege of transferring, and usually it's 3 to 5% of the amount you transfer. Let me give you an example. If you transfer $5,000 to a card with a 3% fee, then it's going to cost you $150 to transfer that. Now, most transfers need to be completed within 60 days from account opening. So that's one of the stipulations. So factor that in as well. Also, like any low interest or zero interest cards, rates go up after a while. That can be a few months or a year and a half. But once that introductory rate ends, the new rate might be higher than the one you just left. So that is something that you really need to keep in mind. And I'm going to ask Gerald to come in at this point to provide some information for you. Gerald?
Yes, thank you, Doris. Just following up on what Doris was speaking on, currently here at the credit union, we have a year-long campaign that is running on Visa balance transfer. You can right now we're offering 1.99% APR on all balance transfers for the year of 2023. It allows you to, of course, like Doris was saying, you could combine all of your balances, transfer to the credit union credit card, and allows you to pay off your debt at a faster rate and at a lower rate. You can also take advantage of no balance transfer fees. We have no annual fees, and it's a quick online application. If you're interested in this offer, you could visit us at www.princegeorgescfcu.org/visa. And when you arrive on that page, you'll see all the various credit cards that we do offer. And if you are ready to start your application, you'll also see the link on that page. It's very quick, it's very easy. Everything's digital, and once that is done, one of our member service representatives will reach out to you, normally in the same day. Thank you, Doris.
You're very welcome, Gerald. With the recent surge in interest rates, or increase, I won't say surge, that is a very, very that's a very good offer. And those of you that can, I would encourage you to take advantage of it. Okay, moving on to the next page, deciphering your credit card code. Now, when most people get their credit card statement, they usually don't look any further than how much they owe. But the rest of it contains vital information that could save you money. And you may be asking, how could it save me money? Because your statement will tell you if you're really getting the best deal on your credit card. Sure, the sales pitch touts all sorts of perks, when your introductory letter, when they're trying to get you to sign up, but the statement gives you some crucial numbers you can easily compare to other credit cards so you can score the very best deal. Moving on to the next page. The most important number on your statement is your current annual percentage rate, okay? APR is what you pay for the privilege of being able to charge on your credit card. And the higher this number, the more you're paying just for the service, just to service your debt, okay? The most devious number on your statement is minimum payment due. This is the least you can pay without being hit with a late fee. But please don't fall for this. Your credit card company would love for you to pay the minimum payment, because that means you'll rack up even more money in interest. More interest charges, might I say. Say you have a $2,000 credit card balance with an 18% annual fee, and the minimum payment is just $10. It would take you 30 years. Yes, my friend, I said 30 years to pay it all off. Finally, the easiest number on your statement is the payment due date. But we mention here, for one very important reason, you can often get that change just for the asking, and I know this to be true. If moving it being your payment date, if moving it a few days later will help you meet your bills, maybe because it aligns better with your paychecks coming in, your credit card issuer will sometimes help you out. And let me tell you, they will most times help you out, especially since the since COVID-19 crisis. Next slide, please. Can you get a credit card even if you have terrible credit? Here's a conundrum. If you have bad credit, you can't get a credit card. But to get good credit, one of the best ways is responsibility using a credit card. So what in the world can you do? Fortunately, there is a special credit card designed specifically for people with so-called bad credit. It's called a secured credit card, and it can help you rebuild your credit so you can then acquire a standard credit card. But of course, like everything else we've discussed today, there are pros, and yes, my friend, there are cons. And let's take the opportunity to go over those now in the next slide. So let's talk about how a secured credit card works. Now, a secured credit card is different from a normal one because you have to make a refundable deposit. The value of your deposit determines your credit limit. Okay, easy enough. So it's not really a credit card at all. It's more like, in some ways, a debit card, but it gets reported to the credit bureaus. For example, if you put down a $500 deposit, you'll have a credit limit of $500. Then you can use your credit to buy things you need and pay that amount off in full. Did I say off in full every month? Yes, off in full every month. On average, it takes 6 months for a secured credit card to start improving your credit. And that's according to creditcard.com. When you decide to give up your secured card, and as long as you've paid any balance, you'll receive your full deposit back when you close the secured credit card account. Now, nobody asked me for my opinion on this, but I'm going to give it. Instead of getting that $500 back or whatever you use to secure your credit card, that would be a good deposit into a savings account, either emergency savings account or whatever, but just to save the money since you haven't used it for 6 months anyway. Okay, that's my plug. Moving on to the next slide.
Okay, one second, Doris.
Sure.
I see you all have some questions and answers. I see those coming in, and I see also your hand raised, Julia. We'll address all of these things at the end of the presentation. So if you don't want to keep your hand raised, you can also use the Q&A chat box, and we can go over the questions at the end.
We surely will. Okay, so let's talk about the downside of secured credit cards. Now, a secure credit card typically has a higher interest rate than many non-secured cards. That's the first thing. You can get around that, however, by paying off your statement balance each month so you don't pay any interest. That's the ideal way, really, for any credit card to work, but it is definitely the way to go with the higher rated interest rate secured card. Now, unfortunately, some secured cards are loaded with fees and other unfavorable terms, including annual fees. And if you fail to make a payment, the issuer can, and might I say will, take your deposit. So you definitely don't want to be careless with deadlines and payments when it comes to your secured credit card. Next slide, please, Gerald. Now, what happens if you're drowning in credit card debt? All of this advice, it might sound good if you have manageable credit card balance or even none at all. But what if you're buried under mounds of credit card debt and you've maxed out on your credit limits? If it gets that bad, you're going to need some professional help. But there is good news. Next slide, please. Thankfully, there are nonprofit credit counseling agencies that can help you. Now, Coffee is under the umbrella of Consolidated Credit, which is one of the largest and oldest credit counseling agencies in the country. When you call your Coffee coach, okay, the counselor will give you a free debt analysis. This comes with absolutely no obligation, and by law, any recommendations must be the very best for your situation, okay? And on the screen there, you will see the number. You may want to jot that down or take a picture of this particular slide. This is the number for your direct Coffee coach, okay, to get you to Coffee. Next slide, please, Gerald. Now, one of the most powerful debt busting solutions is only available through a credit counseling agency, and it's called a debt management program, or DMP for short. It might be able to cut your monthly payments by up to 30, and in some cases, even 50%. A DMP also freezes late fees. And even better, you only make one payment a month for all the credit cards that are enrolled in the program. And unlike a lot of other debt solutions like bankruptcy, your credit score isn't irreparably damaged. Now, to be honest, it might dip temporarily, but it actually improves over time. Unfortunately, credit card companies will not, refuse to, cannot let you sign up for a DMP yourself. Gerald, you want to jump in and add some more information, please?
Yeah, so we're discussing debt management. We have a debt consolidation campaign that's also running that just started on January 1st. It's called Map Your Journey to Financial Freedom. You can find this at www.princegeorgescfcu.org/mapyourjourney. We're helping people map their road to financial freedom. On the site, you'll find a schedule appointment button that you can schedule exactly things that fit your need, your financial needs, and we'll have a member service representative reach out to you that way. You can select topics such as budgeting, debt management, credit management, asset protection, things of that sort. Or if you have something else that is not listed that you would want to discuss, you can also input that into the online form. Lastly, there's a debt calculator on this landing page that is great to use. I've used it before. Put all your current debt into the calculator, and it gives you various ways of various scenarios of paying it off, various interest rates, and all sort of things. So I would recommend everyone check that out for the year of 2023.
Okay. Very good tools. Very good tools. Going back to a debt management program, to qualify for a DMP, you have to work through a nonprofit credit counseling agency that, as I told you earlier, Coffee is a part of, because the credit card companies trust these nonprofits to follow all the rules that they have established for debt management programs. After all, the credit card companies are willing to forego now some of what you owe them to get back the rest. They don't surrender profits that easily. These companies are for-profit businesses, right? Luckily, when you work with a reputable credit counseling agency, they take care of the paperwork for you. So in a way that becomes, even though we have listed on the screen a con, but in a way that becomes a pro, because you really don't have to do anything as a Coffee client. Moving on to the next screen. Now, DMPs are not for impatient people. It often takes years to graduate into financial freedom. One reason for the long timeline is that DMPs are supposed to be relatively painless. So imagine a crash diet, okay, compared to a gradual lifestyle change, okay, that help you to lose weight and get healthier. That's really how a DMP helps you shed your debt. And your credit counselor or your Coffee coach is there for the entire process, there to hold your hand the entire way. But if you're looking for a quick fix, this isn't for you. A debt management program by name is not a quick fix, but it's often the best and most permanent solution to debt situations, depending upon what your debt situation is. Okay, moving on to our last slide, please, Gerald. Now, I just want to take a few moments to discuss coffee a little more with you. Again, coffee stands for Knowledge of Financial Education. It's a powerful resource that's been provided to you by your organization. Coffee is a collection of online self-help resources matched with financial coaching. These resources are my favorite four-letter word, which is free, and they are unlimited for you to use anytime. To access the portal, simply go to your link and create a username and password to register. Inside that portal, you're easy to navigate inside that easy to navigate portal, excuse me. You can explore a variety of financial tools and you can explore them at your own pace. There are videos, there's webinars, there's podcasts, there's calculators, there's publications, interactive courses, infographics, and all that good stuff. It's more and more and more of tools that you could use for your own financial education and resources to help. Okay. To speak confidently with a live financial coach, you call that dedicated number that we shared earlier. The financial coaches are certified credit counselors and can provide guidance on many topics, of course, on budgeting, on saving strategies, on rebuilding credit, and on debt resolution. If you're in need of housing assistance, okay, you can receive valuable education and resources for many situations and programs, such as first-time home buyers. If you're at the age for reverse mortgage, we have reverse mortgage counselors, and of course, how to avoid foreclosure and different housing topics. Even rental counseling is offered now through our HUD certified housing counselors here at Coffee. So that concludes my portion of the presentation. Thank you all for your patience and thank you all for your attendance. And Gerald, thank you for the invitation. I turn it back over to you.
Okay, and right before we get to questions, I want to thank everybody for attending today's educational webinar. Again, to learn more about Prince George's Community Federal Credit Union or to speak to a member service representative, please visit www.princegeorgescfcu.org or you can call 800-952-7428. All right, so let's see. Let's open up for questions. Got a couple questions here, and hopefully Doris could help us answer these. Julia Maynor, I hope I'm saying that correct, asked, what credit cards shall we get to increase our credit score? I have a secured Capital One of $500 and pay off all charges to zero when the bill comes out. If I charge $30 all paid off, is that good enough to raise the score, or should I leave a small balance like $5?
No, don't leave a balance and continue. I missed or I didn't hear it mention how long you had it, but this is how it works for most entities. Once you are, and I'm accustomed to banks or credit unions, okay? Once you have a secured card and you keep it in good standing, my experience as a former banker has been that if you keep it in good standing and ideally to use it and pay off that balance every month, not to carry a balance is the greatest standing, then the financial institution will sometimes, most times, like I said, based upon my experience, will offer you an unsecured credit card. But after 6 months, if you don't get an invitation letter, I would go ahead and apply to Capital One. And of course, always, always, always visit your credit union. Visit Prince George's.
Okay. An anonymous attendee. Can the DMP impact my ability to buy a house?
While you in the program, it can. It is not something that I would endeavor upon while I'm in that or if I'm looking to get into that process. Now, let me make a disclaimer. What I would do if you're interested very soon in purchasing a home, I would speak with a housing counselor, okay? Because that housing counselor is going to take a review of your debt and of your income. And if your income if your debt, excuse me, is at that level where it's not manageable or whatever the case may be, then that housing counselor, and you have them there in your state as well, will then advise you what's the best thing to do to get you home purchase ready. That is the job of a HUD approved housing counselor. So that would be my first step before I would venture over into DMP, because as we said in the presentation, that DMP is going to cause your credit score to lower initially. But as you make the payments on time, and it will be made, through the credit counseling agency, then you will see your score rise. Okay. I hope that answers it. But I would seek the advice of a housing counselor before I got into that.
Okay. Next one, another anonymous submission. Do you have to have good credit in order to be approved for a balance transfer card?
Most financial institutions have a minimum credit score. Is that score considered good? I'm going to say yes. I would and you can always inquire, because different financial institutions have different guidelines. And so you can inquire if that's something you're interested in, to see what is the minimum credit score for a balance transfer offer.
Okay. Looks like it's it for today. I want to thank everybody once again for attending. Thank you for asking questions and being engaged. And we hope that you all will join us for our upcoming webinars that again are each Wednesday this January in 2023. And you can find the sign up for those at www.princegeorgescfcu.org/webinar. Once again, thank you again, Doris.
You're very welcome. Hope to see you all next week. Take care.